that's enough for the news. let's uh, let's go to something a little bit lighter. So we have an ongoing thing called Worthington's Law. Do you want to tell everybody what Worthington's Law is, Lacey?
Well, I guess I'll give the shortest version of it ever. It's really the idea that people that have money are somehow morally superior to people who do not have money.
Right.
You're smarter, morally superior, more talented, etc. And so, therefore, the opposite is if you don't have money, it must also be because you are lacking in all of those things.
Exactly.
That's my super short version of it.
Yep. It's the more money you have, the better person you are, and thus beyond criticism.
Intellectually superior, morally superior, etc., etc.
So we like to make fun of guys, especially like Dave Ramsey's one of our favorites. But I got a new guy. We're gonna have some fun with him going forward. And I got this from the Young Turks, and I love him because he just says it out loud. No shame whatsoever. This is Grant Cardone being covered by the Young Turks. You're gonna love it.
If I made $400,000 a year, I would be embarrassed with myself as a husband, a father, basically as a human being. Big boy right over here popping out. What'd you make last year? What'd you gross last year? 2.7. How does anybody live on $2.7 million a year? You need to make it impossible, dude. But I can't. My plane eats $2.7 million a year.
That's Grant Cardone. He's a finance influencer, and he is insufferable, to say the least. Apparently, making $400,000 a year would embarrass him. He wouldn't feel adequate as a father, husband. He'd be embarrassed. Let's take a look at some of his other videos in just a moment and see whether or not this guy knows what he's talking about.
So,
okay, I just have to say, I would literally never give that guy a date. Ever. Ever. I would be so embarrassed to be in public with that guy. Oh my gosh.
oh yeah, oh absolutely. Can't even tuck in his shirt.
He'd be embarrassed if you only made $400,000, but at any dollar amount, I would be totally embarrassed to be somewhere in public with him.
Well, it takes $400,000 worth of Viagra just to make him feel like a man, apparently. Talk about Tiny D energy coming out there.
Well, I feel like a broken record on here because I feel like I'm always talking about how completely out of touch some people are, like how just ignorant to other people's life experiences some people can be. And I think this guy completely surpasses Ramsey. Like, I'm always saying this about Ramsey and his people,
right?
But this guy takes the cake.
Well, the thing about Ramsey too is he's not going to say it that out loud. He does say it. He just does it in a very subtle sort of way, right? Where he says, yeah, you're kind of a loser if you have debt, or you're a loser if you have these kinds of things, right? But he doesn't flat out get up there and go, you're just a worthless piece of shit. Unless you're, in the top 1%, right? But that's how it goes. But anyway, Anna's trying not to laugh because this guy's, like you said, he's just a clown. He's hilarious. But she's gonna check some more out. So let's see if he knows what he's talking about. Because his whole thing is you can become rich by flipping real estate. That's his whole spiel. Once again, guy who's never held a personal finance license that I could find. He's just worked in sales and real estate kind of stuff. But he owns a bunch of businesses. I think he's worth like $4 billion or something, or he claims to be. But we'll watch this.
Oh, spoiler alert, he doesn't. Before we do, though, Cenk, do you feel inspired?
Yeah, look, I don't know what it is about the right wing that enjoys guys like this. Because no one on the left wing likes guys like this. The right wing likes being yelled at and saying and being dominated in some weird way. Like, hey, you're not good enough. You're not man enough because you don't make $400,000. And guys, think about it this way. I've made as little as
Well, we'll skip some of this, but yep, he called it there. Yep.
Yeah, that's a really interesting point. Why is that the right wing likes being like yelled at and borderline abused?
I don't know. They love being talked down to. The thing about it too is he kind of nailed it. I mean, as you pointed out, where it's like people that like us are more on the left, we're just embarrassed for the guy. But people on the right think he's like the shit, and we're just sitting there going, "Oh my god, I wouldn't want to be caught dead in a room with this guy."
Right.
He nailed it. He's like, it's weird. It's a weird phenomenon. There's just something about like 25% of people where they have this sort of. I know they've done studies where they have a higher sense of like fight or flight, and these people tend to they like fascism. They want to be told by the great leader and be in deference to the great leader, and the leader is always right. You know, I sort of get it. It's like, wouldn't it be nice if Tom Hanks said, "Don't worry, everybody, I'll handle world peace and everybody will prosper"? I'd be like, okay, well, all hail Tom Hanks, I guess. I mean, I get the temptation, but it's like they go like searching for it, and they always find these con men who just take them for everything they're worth. So we'll skip ahead a little bit, but this is just so good with this guy. So she's gonna do some more stuff with him.
With a multifamily portfolio of assets worth over $5 billion. So Cardone is also an author and public speaker. And as for his social media presence, he has 4.3 million followers on Instagram. And look, Jake, I actually think this isn't something that just appeals to right-wingers. I think that this appeals to a lot of like, I don't know. I think mostly young men who want to be inspired, who believe in the hustle and think that like, oh, if I just apply myself, I can be fabulously wealthy. He's got 2.4 million YouTube subscribers, 1.8 million followers on TikTok, and 1 million followers on Twitter. So let's talk a little more about his content. First, let's listen to his advice about home ownership, and remember that he's made a fortune in real estate.
Know what you buy. Homes were not built for people. Homes were built for banks. The bank created that product to sell money. The bank can't lend money for just money. You need a reason to borrow money. Oh, you're starting a business. That's a reason, but it's really risky for the bank. What if a bunch of bankers sitting around drinking bourbon? We got to lend money out, man. That's how we make money. We get people to give us $1. We lend it out 9 times. We need something to lend the money on. So back in the 50s, they're like, everybody should have a home. We should call it something like the American dream. They got the politicians behind it. Those homes were built for banks because who made all the money on the homes? It was always the banks.
So, hang on, we'll go through this ad real quick.
Okay.
So, there's a couple things wrong with that. One, yeah, banks make money lending out to homes, but how did banks really start making money on lending to homes? It wasn't from lending. It wasn't from giving out mortgages, because a lot of those were under Fannie Mae, Freddie Mac through the federal government. And they were strict on how much you could charge for interest payments and things like that, and how much you could charge for the home. So it was very affordable back in the 50s and 60s, right? What ended up happening if you guys have never read The Big Short and aren't familiar with the housing crisis of 2008, I'll tell you, there was a guy in the 70s named Louis Veneri, and Louis Veneri came up with a really brilliant idea. What if we take all these home loans, because everybody pays their mortgage, right? Back then, at least. And we'll package them together as a secure bond that we can sell as a security. And you now, the investor, can get the interest payments on that, right? And so what happened was they did that, they packaged them together, and they sold billions and billions of dollars worth of these to pensions, right? And retirement plans. And it was a brilliant idea. Now the banks are raking in cash, right? But it's not from lending out to the homes so much. It's from being able to package these securities and sell them off. So now I'm the bank. I give you the home loan, right? But I get the money through Freddie Mac or Fannie Mae. I then take that. I sell that loan into a security, into a package. So now I'm not on the hook for the loan. I instantly get paid as the bank for selling it right out of the, and I have no risk now because I didn't hold the loan. I got rid of it. Right. And then these pensions bought it. And a lot of these pensions later on went under and got screwed by these. So now the problem is what happens is now as the bank, as the bankers, I want to sell more and more and more of these loans. But there's only a finite number of people and homes in the United States. So what do? Well, this is what happened. They started going, well, we're going to give out higher and risk loans. We're going to start loaning people money for houses that they can't afford. And we know they can't afford. And it doesn't matter to me, the bank, because I'm not holding the loan. I take no risk for it because I'm going to take the loan, give it to you who can't afford the house. Right? I take no risk. I take the loan. I sell it off on a security. So now everybody's holding all this bad paper in their retirement funds. So basically what he missed there was the problem isn't owning a home is a bad idea. Owning a home is a great idea. It's the biggest way to transfer wealth in the world is owning property. Right? Most people in the United States, that's how they got a lot of their wealth, from property. They inherited mom and dad's home. Right? That's how he got wealthy, buying real estate and selling real estate. It's a great way to do it if you know what you're doing, you have the money, the capital. What ends up happening though is when you don't regulate that shit.
Disaster time.
Right. But that's what he missed of that whole thing. Because it's like, once again, she put out, this guy that's what his thing was. I make all my money on real estate. But you shouldn't be buying homes because it's for the banks. That's not true.
Yeah, his point seems super weird. I'm kind of curious to keep going here and see if he
if you don't
gets to a point that makes more sense.
No, but the point is if you don't know the history and you're just a salesperson like he is, right, where I'm just selling my books and my products and crap, I just have to make it sound interesting and like I've figured out the solution here. And the easiest way to do that is to say something that's contrary to common understanding, right? Or contrary to what the economists are saying. Because now, I actually figured out the thing that nobody else knows.
I figured out the real deal,
Right. I solved the mystery, right?
The real story is more like this. Yeah.
Right. But the real story is more like, no, he's just selling you shit. Why? Because how does he make a lot of his money? By you buying his crap and going onto his YouTube channel. You investing in his business. So.
At first, I thought I was going to hate him.
What was that?
I said attending his seminar.
Yeah.
I did make all sorts of facial expressions, but no, there is a point to what he's saying there, to be honest with you, right? Because when you consider the interest that's attached to a 30-year fixed mortgage, even when we had super low interest rates, if you don't make extra principal payments on that home, you actually end up spending double the amount of what the value of that home was by the time you're finished paying off that loan in 30 years, assuming you can finish paying it off in 30 years.
Yeah, but so what? If your home value goes up, which has happened for the great majority of Americans, and we've been lucky in that regard, it doesn't always happen, but generally it has, and certainly over through all these decades, you wind up winning huge on buying a home.
That is very true. He left that part out of the equation.
He leaves that part out of the equation, but he speaks with such confidence.
Mm-hmm.
Right. And so Jank actually kind of makes the point there. Because at the end of it, once you buy the house, you have all the equity. And even if you don't pay off the house completely, even if you've just paid off most of the loan or some of the loan, at some point, you are positive equity unless you're underwater. Right? So the idea is And and this is for young people. If you can afford to do this, you get the little condo first, right? For 200,000 or whatever it is, whatever that you can afford, right? Then you build some equity in that. All right. Then what you do is, okay, now I want to get a bigger place, or I have kids now, or whatever it is. Well, what you're doing is you're taking the equity that you have in that house and rolling it into the new one, which means your payments are probably going to go down, even though you've got the bigger place now, right? And the beauty of that is if you roll equity from a like property to a like property, so especially a more expensive property. So it's my primary residence and I'm buying a new primary residence. I can roll that equity into paying down the new place, lower my payment, and I don't have to pay taxes on any of the equity.
Right.
And so then you live there for 10 years or whatever it is, and then you're like, well, no, now I want to get the even bigger house because I'm making more money. So now you're rolling even more equity into the bigger place, probably lowering your payment again. And now you've got all this equity. Right? And so, like, even from her perspective, it's like, we'll just do this real quick at the calculator. Let's say I bought a $300,000 home, and let's say I got a 6% annual interest on the mortgage. Then it was a 30-year loan. Then my total payment would be $21,000 a year times 30. So I'd have paid $653,000 on that $300,000 loan, right? So she's right. I'd have paid double, right? But let's say that same house goes up in value by 10% on average per year for that same 30 years. That $300,000 house would be worth probably $5 million in 30 years. What's the other solution? I have to save $300,000 and buy it outright? No, it's easier to loan the money.
Right.
And see, yeah, okay, I paid $650,000 for the house that was $300,000, but now that I've had paid off the house, it's worth over $5 million.
Yeah, this guy's point is super weird.
Right, so it doesn't make sense. So the other guy, Cenk Uygur, who runs the Young Turks TYT that we're watching, he nails it. The equity is where the fucking value is. It's time value of money. But if you're just thinking short term, then yeah, I don't know. I don't know what to tell you. I hope you win, but you're just gambling at that point. So let's watch a little bit more of this because I think they're hitting the points pretty well here.
Makes it seem like, only a sucker would buy a home because he only told you half the story.
Mm-hmm. That's exactly 100%. Okay, so he's actually addressed his glaringly obvious conflict of interest. Remember, he's a real estate mogul. He's an influencer who's giving people advice on home buying. And so let's see what he has to say for himself on that issue.
You said that buying your home is a dumb idea. People think the reason you're saying that is because you own a bunch of rental property. You're trying to trick people into not owning anything so they can come rent with you.
Oh, yeah, that's what I'm doing. Why not? I'm not trying to sell anybody anything. I'm trying to help people create financial freedom for themselves. There's not one...
Okay, tell me this isn't just me. His eyes look a little bloodshot here. Is that just me?
No, they look... Yeah, I'm with you.
He looks like a vampire in this shot. I keep waiting for Wesley Snipes to show up and, stab him.
Right?
Where the fuck is Blade when I need him?
Report in the history of the world of anyone creating financial freedom because they bought a house. Jamie Dimon, he's on CNBC talking about how great the economy is. He's not thinking about people buying a house when he says that stuff. He's thinking about his rich friends. These people don't even talk about the house they bought. Donald Trump down the street, he don't buy one house. He buys the whole building and lives in it.
That is insane. No, that argument is insane. A ton of people have built equity. It
I
is,
agree.
well,
What was that?
I agree. So you've got a real estate mogul that theoretically, basically created their fortune through real estate or primarily real estate,
rental properties.
talking about how people aren't getting rich because they buy their home. And unless his sort of sleight of hand here is you don't get rich from buying your home that you live in, you get rich from buying homes that you make other people pay you to live in. Like, is that where he's going with this? Because if it's not, I'm confused.
Well, you can do this. I can say technically you don't get rich from buying your home. Why? Because the money's all in the equity in the house. Right.
Right. It's tied up, essentially. It's not,
right.
liquid.
That's not the point of buying a home, though, like that. The point is that your kids are going to inherit that. And it develops intergenerational wealth.
Okay, let's talk about the other point, which this is less a wealth point and more a long-term planning point. But in terms of planning long-term for your future, if you have a house that you've paid off by the time you hit retirement, you've also just sort of secured your own retirement in a way. And then if you get to a place where you're going into assisted living or you're going into a nursing home, you could sell it and you could utilize what you gain from that. You know what I'm saying? So I guess that's wealth, but even like if you're not thinking about it from a wealth standpoint, buying a home as opposed to being in a rental forever has a way of sort of securing your own future stability.
So here's a popular thing in when I do retirement finance and real estate finance. So you have the couple, right? This is more common with boomers and Gen Xers. Millennials are going to have a hard time with this because a lot of us don't buy homes. But let's say you had the 2 kids, you guys bought the big house, and you've got that's your client, and they're living in the freaking $700,000 home. And I've had people that husband and wife who were teachers, not making a ton of money, but they kept rolling equity from house to house over fucking 30 years. By the time they're 60, they're living in almost $1 million house. Even though they never made more than combined, they never made more than about 120. Mm-hmm. But they were able to, gradually build that up and build that wealth. Well, now they're getting ready to retire. And it's like, well, yeah, but you don't need the 2.5 or 3-story house, whatever the fuck it is, right? And especially in your 60s and 70s, you don't want to be cleaning that and dealing with a lawn and, especially if you have hip problems or knee problems and you got to go up and down the stairs all the time. No. So what do? They want to buy the really nice brand new condo that's cheaper. Okay. Well, when you do that, right, you can, let's say they can take the equity in the house, roll it into the cheaper house, right? And usually they can pay it off completely or pay off most of it. So now you're going into retirement and you use that equity to buy a whole new place. You have almost no mortgage to speak of. And there's a one-time deal where you can do that without having to pay tax on rolling that equity. Not all, I mean, it's capped at like $250,000, I think. But think about that. So now you went from, okay, I'm paying my mortgage, whatever it is, $1,800 a month or $1,500 a month. But now I've just bought the condo outright that I can manage and afford. So now I have no mortgage. I just saved myself, what, $14,000 a year in payments? Now I can afford to retire because we took a huge obligation off the board. And sometimes they have extra equity, and then you just put that in their retirement accounts and invest it so they have even more money.
Right.
So, like you were pointing out, look, this is not just, intergenerationally, this is a big deal, but also this is a big deal because you've built that up as an investment over your lifetime. And housing, even though we had the housing crash and all that, is still fairly secure compared to market investments. Right? But if I'm selling my rental properties, then of course I'm gonna no, you don't want to buy a house. You want to rent from me at $2,500 a month, where you're getting no equity.
And definitely when you're 70, that's what you want to be doing, as opposed to having your already paid for house, which you could either live in or sell and use the money for whatever other thing you live in.
Well, right. So if you're 70 and you can own the house and it's paid for, so you never have to pay a mortgage, or you could pay $2,000 a month to live at my property, my rental property, which you're on a fixed income. If I raise the rent to $2,200, that's fucking devastating to you. Because now you're 72 and now all of a sudden you can't afford your rent anymore. So what are you going to do? Are you going to move? So no, there's a huge advantage to owning property. Huge advantage. Especially when you get older. You really, I mean, trust me, kids, if you're older, you want to own the place you live in. Because then it's almost impossible to kick you out. And you do not want to be on government assistant living when you're in your fucking 70s. Yeah. I mean, if you can avoid it. So we'll do a little bit.
If you can help it.
Yeah. So we'll do a little bit more of this real quick.
Was one of the last remaining investment vehicles for ordinary people, working class people, to build wealth. And that has been snatched away from them by private equity firms, by foreign investors looking to launder their money in U.S. real estate. Like, what is he talking about?
Yeah, he's full of crap. When he says, I'm not trying to sell anyone anything.
No,
Really?
Right.
But then why are you doing the shows online? Because think about it, guys. If these guys remind me of psychics, right? Oh, I can tell the future. Here's how I know you can't. Otherwise, you'd be a billionaire. Go tell the future on the stock market, and you'll have more money than you know what to do with, right? So in his case, if you're such a billionaire or whatever you are, or incredibly rich from real estate, why don't you just keep doing that? Oh, I'm here to help you. Are you? Are you? My guess is you actually didn't make that much money from real estate. You're making most of your money through this scam where you tell people what to buy. By the way, commercial real estate, look, man, guys, buyer beware of especially guys talking super confident online, okay? Mm-hmm. So commercial real estate is in a world of trouble. Post...
He's absolutely right about that, man.
All right.
No, he's absolutely right about that. I mean, these guys come out here, oh yeah, buy commercial real estate, right? Buy this and that, buy it through these companies. He's getting a kickback, I'm sure, right? But you got to remember too, for realtors selling commercial real estate, they're getting whatever 15%. That's a huge commission, especially if you're buying $1 million plus property. So yeah, that's a lot of what he sells on his channel is invest in commercial real estate or invest in these products or invest in these things, right? And it's all the same. Buy gold. Buy tungsten. The other thing too is
that's a mention. I'm not trying to go down a totally different rabbit hole, but pumping people to buy commercial real estate, it's still real estate, but it's kind of a horse of another color. Like, it's a bit of a different ball game.
Oh, no shit.
And it's sort of like somebody being like, well, you've invested in your 401k, right? That definitely means that you're prepared to go start investing in individual stocks because it's all like the market, right? No, it's very different. You need to do all different homework. And commercial real estate requires you to do homework in a different way. You need to understand different things than if you're buying, single family property or a duplex or, something like that people are going to live in. It's not the same ball game at all. So
no,
dangerous to be pumping that.
Yeah, I remember taking real estate finance in grad school, and the professor taught it. He used to do it for airline companies, these huge commercial real estate projects where they buy them, and he also did it for movie theaters, like big movie theater companies, right? I'm not going to say which one because they're out of business now, but I was like, movie theaters, why would why would they care so much about real estate? And he's like, because that's how they make all their money. He's like, they make a lot of their money through selling you popcorn and soda and stuff at ridiculously marked up prices, right? He's like, but what happened is it used to be like the movie theaters would rent the films. Now they don't do that. They get the films and they show them, and then they just give the ticket sales, a percentage of the ticket sales back to the production company, right? So they don't have to risk any real money up front. And he's like, but essentially what a movie theater is they're a hotel that rents you a seat for 2 hours. And he's like, and when you think about what a movie theater is, it's the parking lot, the structure, right? The seats, right? All that stuff. He's like, yeah, when you look at a balance sheet for a company that owns a bunch of movie theaters, that's the biggest portion of their balance sheet is their real estate value. It's the same thing with this commercial real estate. I have all the rental properties, right? Well, the value of that is how much of those can you actually fill, right? Because if your occupancy rate is 30%, you're losing money, right? But that's always the trick to commercial real estate is, how many people can you get in there? What are the costs going to be? So, yeah, it's like you said, it's tricky. You really, before investing in that kind of stuff, you really need to know what you're doing. And I would sit here and say, like, if somebody came to me and said, hey, what do you think about this commercial real estate purchase? I would say, let me refer you to somebody who does this professionally. Right. I mean, I could do an assessment for you, but I know I'm going to miss something that somebody who does this, for a living is not. And that's just reality. I mean, you'd only be an expert in so many things. So anyway, I still love it. The guy is he's just a jerk. You're a loser if you don't make this money and blah, blah, blah. But that's the first part of the sales pitch. Is you're a loser if you're not making this kind of money. But I can help you make this kind of money.
Right. He even tried to paint the guy who was making over $1 million as a loser because, what was it? He said that his private...
my private jet eats $2 million a year. Yeah.
Or something.
Yeah.
It was like, oh yeah, you're a loser because you only made over $1 million last year. I'm sorry. Try convincing any, regular non-millionaire American that the guy who made over $1 million last year is some kind of loser. And this is what this guy's trying to sell us on.
Yeah.
Like, as soon as he said that, I was like, okay, you're seriously just full of hokum because everybody's like, hey, that guy's doing great,
Well, but that's kind of like Cenk made that point, which is if you're so freaking talented, right, why are you doing all this YouTube stuff and pushing all these sales shit on that? I mean, we're doing it for fun and to give advice mostly. We're not selling anything. Not yet anyway. You never know, boys and girls. By the way, Rolex, your watches suck. Convince us that we're wrong. Both of us. You need to send us some samples to convince us that we're wrong.
True.
Yes. Jaguar, your car's blow. You need to send us some samples.
It's true.
Anyway, but yeah.
Oh, and Tesla, when you find out that Jaguar sent us something, you're going to have to show them up.
Yeah, you got to do it. I don't know what to tell you. I'll settle for Kia too if Kia wants to send us stuff. Anyway, no, my point is like, yeah, you're not gonna see us like selling, weird financial products or something like that. We're not gonna do anything like that. You're never gonna see us going, yeah, you need to buy whatever NFTs or some shit like that. No, why? Because it's junk. And the bottom line is look. He's talking about, oh, well, Jamie Dimon's not talking about real estate and blah, blah, blah. And I'm like, yeah, because Jamie Dimon makes $31 million a year as the CEO of Chase Bank. Jamie Dimon's got most of his money tied up in the stock market. Jamie Dimon doesn't need to go out and sell shit and peddle crap like you do.
Right, like you're just pulling random names that actually don't have any relationship to what you're talking about out of the air.
Right. Donald Trump does need to sell a lot of crap because, he's cash poor. So he's always selling something or trying to raise money. He got convicted for the E.G. and Carroll thing. Freaking same day they were out trying to raise money. I mean, so just know who your scam artists are. I think that's enough for today. I mean, we got some more stuff we can do next week, but yeah, fun stuff. We're gonna have some more fun with Mr. Cardone. He's a character. He's a good guy.
Oh man, and I feel like he probably just is one of those guys who just is going to keep saying things to give us fuel.
Oh yeah, it's really embarrassing too. He's 65. God, if I were 65 still doing that shit, I'd kill myself. I'm not gonna say